Let's check on the futures on Wednesday night. I'll start with the S&P futures. A pretty wild session. You can see the swings. The VIX is pretty low, which signifies not a lot of action should happen normally, but this is the exact opposite. So we have had pretty wild rides, and they're continuing the rally after hours. So let's work with the levels first. The clear breakout level is 48.05. We marked it before the market opened as a 48.05 to 48.15. So split the difference. That's the cluster you have right there on the screen. So I would keep that in mind. This zone is pivotal. So if we ever come down to it, that would be an exit point for bears. Speaking of bears, if you're brave enough, you could short against this and see if you get some points out of it overnight. That's probably the best trade. And I'm going to give you a couple of levels. So I would short where it's at if I can survive that much of upside against me. And lines to watch is 48.23. There should be some basing there, so they might bounce right where the jag is. And ultimately, the better bounce level is 48.21.5. And if not, we would satisfy this zone of candles that they struggled with on the way up, and that would be around 48.20. I know that's not a lot of points, but if we get to 48.20, maybe they'll have another bounce, and maybe that bounce will come down this way. So what am I saying? Try to short with a stop. And if you get target 1, it'd be tempting to leave runners to get target 2, and that would be worth it. That's ultimately 12 points, 10 to 12 points of downside. That's pretty sizable on the futures. If you only want to look up, and I don't blame you for it, 2 ways you can handle this. You can go long and hope for the best, or wait for the breakout, and in which case I don't mind that at all, but I do mind chasing the breakout. I would let them break out, and when they come back to recheck, I would enter long on the recheck, or use this to assume that it's going to curl back up. So if I'm looking up, I would do this and curl back up. Instinct says the market has everything it needs to go up, and why aren't they higher? In fact, the RTY is higher, and we'll get to it in a minute. So look at the NASDAQ, the NQ. It is higher already after hours, and so it's doing better than the S&P. Something in the S&P is maybe they're rolling out of the certain stocks that drove the S&P. But I hear Microsoft may have a catalyst higher. So shorting is pretty tough on this ticker. They're breaking out. So if I'm long, I get it. And your target probably will be at, I'm looking at 17,010, 17,015 as an exit point. They might need to check back into the moving averages at some point. Use that for buying opportunities. If you can short from here to here, kudos, but I don't know how you're going to time it. You don't have any reference points. You're just going to have to short and hope, or wait for the dip, buy the dip, and see if they curl back up. The RTY is probably the most exciting one. Pretty spiky after hours. If you look at it from the IWM perspective, you'll see what I mean. These are pretty violent after hours, and it's not like this is driven by one stock. A sector must have gotten a goose somewhere, and I'm not sure what it is. I'll have to look into it. Important point, they crossed over is right there at 1988, 1989. And look at it, it has history. In fact, they're still stuck in its history. So I would fair to guess that 1992 is a good year, by the way, for me. So they're stuck in 1992 and battling for it. Now, the bad thing for the bears is that this was a slippery slope. What does that mean? There's not a lot of transactions here. So the bulls, if they want to, they can just glide through this without a lot of resistance until they hit a higher volume node up here. So as long as they're below 1998, they have very little resistance from volume. They do have a level resistance at 1996. So you have 4 points here. If I wanted to chase that, I would wait for a check back to the breakout. And today, look at what happened on the checkbacks. They were violent. There's one. Look at that one. They've had a few. So don't trust it too much. It's probably easier to trade the ES. In fact, out of all of these, it's the easiest, the ES. Gold, during the day today, we had a couple of good comments on it for active traders that were in the live room. If you were lucky enough to be there, you caught some of those. So it is still bearish. They are selling rallies, and the bearish part is that it lost a level, and they're trying to get it back. This little rally here, they're trying to get it back. this dip, they're not out of the woods. I think the volume resistance is here. There is volume resistance, I think. Levels, it's scattered into 2035. So I'm going to say from 2033 through 2035, maybe 36, there's going to be sellers. So if I don't catch along with enough room here for me to make money, I'll wait to see what's going to happen. I bet you there are sellers into 2037. And the danger would be for it to curl back down. And if they can't stabilize at 2029, they may end up making a lower low. Now, I mentioned that earlier live, a lot of buyers down here. Look at these candles at 2023. And a lot of buyers here, clearly they're going to try to hang on to it. But they are making lower lows. Sorry, lower highs. And I don't know if you want to, this is almost a lower low. They're not out of the woods. And the CL today also fell apart. And I know a couple of people in the live room caught it. This is tradable. This is short to rally because they lost a level and they haven't regained it. They do have a backup level of resistance. So as long as they cannot come out of, say, 72, I'm going to round to 72. It's actually 71, 8 through 9, but I'm going to go to 72 because it's not that it's a round number, because I have these candles. These used to be big buyers and now they're suddenly sellers, and they have this level and a whole bunch of sellers up here and moving averages. You get the point? It's easy for it to do this. And this is oil, and it's manipulated, and it's prone to headlines. They do have backup support here as well. So it's a sell the rally mode until they can get back above 72. That's my opinion on that. And eventually, if they don't pay attention and they continue to sell the rally mode, they'll find themselves in the 60s. Don't short it because I said it's going to the 60s. I'm saying sell the rallies into resistance at 71.8, 71.9, and 72, and see if you can get the curl. And the profit will be from the entry point down to the base. And if I leave runners, I may get the secondary leg lower. I still think the S&P is the easiest one out of all of these.